Good morning, Malcolm. It's good to have you with us today. Thank you. And to our viewers, if I may introduce Malcolm Palmer to you. I've been fortunate enough through one of our businesses to work with Malcolm for a number of years. He looks after a lot of money for our clients, investor money. Malcolm runs Malcolm Palmer & Co. stockbroking investment firm, a firm that's been in his business a family for about 150 years. And today, Malcolm will be talking to us and providing us with some insights into the global economy, Australian economy, and the economic outlook, with a particular focus on the COVID pandemic and the upcoming US elections. So Malcolm, thanks so much. In our sort of prep for today, I have asked you to sort of shed some light on matters as they pertain to areas of interest for small to medium business owners, business managers. My focus as a business coach, advisor, mentor, strategist, and capital market specialist is to help small to medium business owners, managers with their day-to-day challenges and really help them to succeed. So that's the focus today. Perhaps just leading straight into it, Malcolm, I can ask you to shed some light on the COVID pandemic, how you see that sort of impacting the world, the outlook from that perspective, and in particular, how you see that impacting the global economy and the Australian economy.
Yep. Thank you, Doug, and thank you for the opportunity to speak to you and your clients. And I happen to be an owner and operator of a small business myself, so I understand some of the opportunities and challenges that are widespread in small business. So looking at the pandemic, and not for a moment diminishing the health concerns, which are in the domain of other people, but the economic outlook from my perspective is troubled. And I think we need to use that word. And we also need to understand that there's no point sugarcoating things, because there is a recession around the world, a global recession, and businesses operate differently during the economic times that offer some strain. And one of the things we have as an old business is the opportunity to go back into our business history and look at how things happen in previous cycles, whether it be the Great Depression in the 1930s or even before then, and able to see how clients and the economy reacted post that time. There's no doubt at all that the economic outlook has both some opportunities and some risks associated with it, and that pandemic is creating more risks than opportunities at present as the economies of the world slide into a recession. And that's my general view. More specifically, the difficulty at the moment is gauging exactly what the trends are going to be during the recovery phase, because the economic recovery phase is sort of with us from the bottoming of the GDP statistics and the employment statistics during probably this quarter or next quarter. So consequently, next year is all about recovery and the extent or speed of it in different parts of the world and different sectors of the economy. And I imagine in most cases, there'll be some sort of disparate examples of that as time goes by next year.
Okay, so Malcolm, you talk about an uptick in the economy, either this quarter or next quarter. Am I hearing that correctly?
Yeah, so there'll be an uptick in the economy, but we're talking about an uptick from a low base now, because that's obviously what's happened in the last 6 months. So the uptick's going to be, and one of the themes of this is that the world economy is actually accelerating the trends that were happening pre-COVID. And what I mean by that is that there was already a beginning of a diminishing of economic demand around the world. There was a fullness or maturity about some parts of the economy. There was a general issue of inequality around the world. There was a little bit of social manoeuvring going on. And of course, there was some agitation on trade and geopolitics around the world. So the COVID pandemic, in a perverse sort of a way, has caused an amplification of some of those movements. It's caused an amplification, for example, in what you might call the masters of the universe. So the technology healthcare sector, which was starting to build momentum anyway, has become bigger and bigger and bigger. Startlingly so. The technology sector of the world is now so dominant that it's sort of disrupting businesses across the spectrum, everything from real estate to retail and beyond. So that trend's happening. So too is the geopolitical movements between different countries. There's sort of a bit of a shifting of the deck chairs in the world of the geopolitical scene, and that's an important theme that we're going to see in the next couple of years. Also, the economic manoeuvring of central banks, which have been the primary player in this whole pandemic time, is that the shift of both the risk and opportunity has shifted from the consumer and the public onto the government's balance sheet or the government's responsibility through central bank action. And the central bank action around the world has been has been more dramatic than any person could ever have envisaged could ever happen. The creation of money and the stimulus and the amount of money pushed into society through this unquantifiable numbers that is causing there to be by necessity, both a recovery because of the amount of cash created and also a risk because at one day there needs to be a day of reckoning. And that becomes a big theme for next year and beyond, is exactly what happens on the other side of this.
Yes, yes. Now, a large part of what I do with my clients is to work on their sort of strategic thinking, strategic planning, formulation, and trying to really carve out some clarity around what the future looks like in order for them to plan accordingly and to sort of map a way forward in terms of how they want to move their business forward every day towards their set objectives. Now, clearly, in this economic and political environment, it's very difficult to get some sense of clarity into the future. It's quite confusing when you look at the Dow Jones sort of going up constantly. It's pretty erratic, it's up and down, but the trend seems to be that it's gone up quite notably of late. And what I'm hearing you say is that's a bit of a false sense of comfort in that it's driven primarily by the printing of money by the central banks, which of course just continues to increase that debt bubble that we live in as a world today.
That's right, Doug. And so if you look at the more broadly, if you're talking stock markets, the Standard & Poor's 500 in America, which is more representative of the stock market than the Dow, because the Dow's only 30 companies. But the Standard & Poor's 500, more than half of them are down this year. Yet the index is at a record high, and the record highs come because the very large companies, Apple and Amazon and Facebook and others, have gone to record high prices because they are really dominant. And it's one of the issues and one of the themes of this pandemic and post-pandemic world is that the recession that's caused by the pandemic is beneficial for large businesses, much more so than small businesses. And small businesses are really copying this all around the world, are copying it big time. And retailers and operators of small organisations are disproportionately affected by this downturn relative to the big end of town. Just look at Wesfarmers or just look at Woolworths and Coles here. Largely unaffected, and the same with the American super juggernaut companies, largely unaffected. Yet small businesses are really struggling, and that's one of the things we need to see down the track in terms of a recovery in the sector. Focusing on that for a second, however, it's clear as anything that the central bank actions, so that is a combination of producing money through printed money, which doesn't have to be repaid, and fiscally bloating up balance sheets through debt, which does have to be repaid. So those two components are creating the almost certainty of quite cheap money for a long time to come. Bearing in mind the Reserve Bank here has the policy called the Term Funding Facility. The Term Funding Facility is, they say 90 billion, but it'll be whatever. That's 0.25 money for the next 3 years. So businesses can look forward to the opportunity to have credit available. And as credit's available at almost no cost, at least at the base level, there's going to be opportunities for businesses to expand. The other element to this, if the central banks are the backstop to everything, which they've proven to be over the last, well, not just the last 6 months, but the last decade since the financial crisis, they're the backstop that supports everything when anything goes awry, then business owners can have some degree of confidence that the central banks of the world will continue to be the backstop. In which case there is a supportive mechanism both at the Reserve Bank, central bank level and the government level to create a bit of a business certainty outlook and perhaps put a bit of a floor below the pandemic-induced economic downturn. Low interest rates, an opportunity. Then the other theme point here is that businesses, with this trend towards an acceleration of trends that were already happening, if you pick up on my theme there, is the businesses that were going to do something more innovative and were sort of putting it off because it didn't really matter. I think this is telling us that we need to be more innovative. If you've got an idea, if you've got an opportunity, get the funding, go ahead and do it, put some tech into your business, do some acceleration of the things that you were going to do but put off, because really, otherwise, the disruption to traditional businesses is going to continue, and in many fields that will be the death knell. And consequently, I would encourage small business owners, depending on what business they're in, of course, to take their business plan and look at the things that they were going to do and accelerate those processes.
Okay, so there are a couple of very, very sort of profound points that come out there for me. The first one is that I suppose we can't ignore the fact that global leading indicators, employment, particularly if you look at a place like the US, new car sales, retail sales, and the like, are all very much on their nose. And unemployment in the US is at one of its lowest levels ever, I think. So that to me doesn't suggest that there's going to be a V-shaped recovery in the economic sort of cycle, but perhaps more a leveling off and perhaps a prolonged period of flattening out and consolidation for global economies whilst this all sorts itself out. I also question whether there's a silver bullet in the making for COVID. Vaccine, we may get a vaccine. When, we don't know. How effective, we don't know. And what it's going to mean for global economies, we don't know. But I'm sure it's not going to mean the same for wealthy economies as it does for non-wealthy economies. So we'll have to let that play itself out. The other point I want to make, and just make this as a point and a question, is it's all well and good for the larger listed companies to be doing well and benefiting from the monetary stimulus, the printing of money, pushing of money into the economy. But having done a master's level thesis on family-owned business, which was written into a book, I know that 89% of all businesses in the US are family-owned businesses, with the large majority of those employing less than 20 people, but yet they produce in the region, if I recall correctly, 60% of GDP. So if they really are suffering, the economy is going to suffer, just as a point of interest. But the final point I want to make on what you said there is that I totally agree. Businesses need to go back to the drawing board. They need to dust off their strategic thinking, get a good solid plan in place, and look at the environment and the way the environment has shifted and work out what they're going to do moving forward and put a very good implementation plan in place. Because this is not a time to be flying blind or flying by the seat of your pants. Having said that, can you give me your sort of, I suppose, top 5 points of advice or recommendations that you would put out to small to medium businesses in Australia at this point in time?
Yeah, sure, Doug. And I'll just touch on those previous points briefly. First of all, with the vaccine, I think that a vaccine with this Operation Warp Speed, which the United States is pushing for, in other words, every amount of money available is being spent on vaccine development because of the, well, coincidentally, there's an election coming along, but also because of the economic necessity and the health necessity of it. So the vaccine, to the extent that it's going to become available, is going to happen quite quickly. And whether or not it's effective, in a sense, we won't know for some time. But I think what it will be effective of doing, irrespective of whether it's a good, strong vaccine, is that it will create confidence in society and the consumption side of society, which will help bolster economic activity and returns next year. Of course, people to have the confidence to fly again, for example. So those sorts of things, the economic multiplier effect of those are quite important. The US economy, your point about there being it being a small or family business operated economy is absolutely correct. Consumption there, as consumption here, is the key driver to economic activity, and any decline in consumption is going to be a negative for the economic activity. And we're up against those at the moment, those sort of decline in consumption activities. And hence it's very difficult to gauge exactly what points and levels economics recover from and where to. Really difficult to put numbers on these things because there's so much uncertainty and so many balls being juggled in the air. Turning to your point about what advice I would give to business owners, well, the first thing I would do is, and looking from the perspective of my business, is to be financially austere in a sense. Okay, so don't go and overgear yourself financially because the client demands are going to be quite low still. So that's an important point. However, secondly, the opportunities, as I mentioned before, that you might have put off because you thought they're for another era. Well, that era is with us now. Okay, the new era of operations in everything from real estate to the stock market to business is now being brought forward very rapidly through this pandemic, and so that is important. That things that you were going to do, perhaps if they're good ideas now, you do invest in those good ideas. Third thing, of course, is about customers, and customers need to have, even greater attention and care than they always do because customers themselves have got concerns and consternation about the outlook, and that needs to be understood. The fourth thing is that there's probably going to be a disinflationary economic environment around the world. Disinflation's been with us for a long time. and disinflation is the key economic thing for the future. So as we get over the hump of this the recession induced by the pandemic, is it inflation time or deflation time? One or the other will prevail. Nobody quite knows. So do the central banks inflate the economies out of this, or do they deflate and understand that this heavy debt load is going to cause a deflationary environment, or at least disinflationary going forward? So my thought process on that is more likely to be a maintenance of the disinflation environment. So business owners, another one of my points here, need to understand that there is not much coming in the way of price rises of widgets or goods or services in the next little while whilst disinflation prevails. So build business models around that. Then, of course, perhaps the last point is to embrace the technologies of the world, embrace the technologies that are online selling, technologies that are in algorithms or trading algorithms, or whatever it happens to be that is in your particular business that technology can assist with. So these are the sorts of things that I'm looking at, and that I would encourage other people to do so. And of course, most of these are easy to say and hard to do, as always, but nevertheless, they're my points.
Yeah, great points. Thank you, Malcolm. I suppose the doing, because these things are complicated, and we know that running a small business is a complicated affair. You've often got many moving parts. You've got numerous balls in the air, and you're trying to work through them and trying to decide what to do first, how to do it, who should do it, by when, etc. And from experience and having advised literally hundreds of clients over recent sort of 10, 15 years, when stress and uncertainty starts to set in, it starts to impact the family unit. And a large part of my advisory work is sort of stabilizing husband and wife type relationships, stepping in between and being extremely sort of pragmatic and matter of fact, and bringing clarity to the decision-making process. So for those people listening today, if you're kind of grappling with where to move forward to really take a lot of what Malcolm's just said, I would suggest to you that you Google my business model canvas, that you just put in the words business model canvas, and it will pull up the 9 to 11 parts in your business model that you should be thinking about. And to touch on what Malcolm's touched on a few times, think innovatively, get out of the box, have a look at each of those component parts, think about how am I getting to my market, who am I getting to, what am I doing in the way of technology, what key resources do I have to have. This is really a time that we have to lift our games and we have to think differently in order for us to thrive in this challenging environment, which personally I think is going to be with us for a little while. It's not a time to pull your head back into the shell, but it's time to now be innovative, think about the global economy, Australian economy, take on board what Malcolm shared with us today, and put together a plan for the near-term future. Malcolm, in closing, can you just give me a couple of the sort of leading economic indicators? You're saying interest rates you see continuing to soften or remain low. What do you see in the way of residential property, for example, across Australia? GDP growth, those key economic indicators.
Yep, sure. And I like to take the view of being rather hands-on when looking at economic things, not just looking at statistics, which are generally lagged indicators. So what I'm looking at here is some of the anecdotes, and I'm based in Sydney, and one of the anecdotes, which is clear as day in Sydney, is there's an awful disaster brewing in commercial property. You walk around the streets of Sydney CBD, there's a for lease sign on every building, and that's just come about in the last 3 or 4 weeks. And you read in the paper about all the organisations who are going to have less demand for commercial real estate in the coming time, and you look at the construction activity still going on, and the two don't reconcile. So consequently, there's, a General Property Trust, for example, put out a statement last week saying that their Australia Square office here in Sydney had a 94% of its rent was being collected still, which is good, but only 5% occupancy at the moment on their lift personnel count. So consequently, there's a huge disconnect between the people who are occupying commercial space, particularly in offices, but also in retail centres, the large retail centres, and the rent that's flowing through, which is still fairly high. And something's got to give there, and something that will give there will be quite dramatic. There'll be lots of litigation, there'll be lots of disputes between landlords and tenants as the next couple of years go through, as this unfolds, which is a big and dramatic part of the economy, because of course it has the economic multiplier or flow-on effect to get to the banking sector, which has lent money to the landlords that are expecting to be repaid out of the rents that they're now no longer going to get. So this is a big issue, a big theme of economics, which will flow through to other things as well. Another thing that's important in the world of global macro is the geopolitical risks around the world. And I'm not just talking here about the media covered US-China spats, which will continue pretty much forever as the two big superpowers sort of grind up against each other. The issue is more to us for Australia, other areas. So if you think about our near neighbours, Papua New Guinea, for example, which has relied steadfastly on energy exports for a long time, particularly oil and gas, or LNG. And now there's been a collapse in that industry. So how are they going to survive with no tourism and no energy exports? It's a really big problem for a country like that. Think about the African region. So if you look at the Mediterranean region in particular, which are generally energy exporting nations through Algeria, Tunisia, Egypt, and into the Eastern Mediterranean, those countries are really in trouble. They're really significantly indebted. And the IMF, as the International Monetary Fund, has already had more than 100 claims against it, requests for funding from countries which are teetering. So this is a big global problem in geopolitical sense that is going to unfold over the coming year or two as well. And it has ramifications for everything that we do. So that's something which is worth monitoring and following. The next part of it, of course, is consumption, domestic consumption, whether or not we spend, because people are spending whilst there's stimulus available, but that will sort of drop away a little bit as the stimulus drops off in October and November period. And, the Christmas sales period into next year will probably be relatively poor retail sales and consumption activity, which means that you mentioned there being a V-shaped recovery. Well, there is no V-shaped recovery. I mean, we've had a sharp V on the downside. We're going to have a Nike-looking swoosh, if you like. So a bit of a recovery, but it's going to be a long, grinding recovery as opposed to something that's dramatic. There'll be spots here and there that are favourable and spots here and there that are, like I mentioned with commercial real estate, that are really troubling. And you bounce and juggle all of that together, you get a bit of a picture of a mismatch of economic data that is going to be so unpredictable that we'll find it very difficult to predict.
Are there any shining stars in terms of Australian industries that you can point to and say, I expect that they will do well over the next 12, 18, 24 months?
Yes, well, certainly the export industries into China, not just iron ore and whatever, but also agricultural businesses are going particularly well. China seems to have rebounded more quickly than others from the troubles of the pandemic, and consequently their demand levels are quite high. So the export markets here are being favourably enhanced by that. There is also the online, of course, so selling things online, all sorts of things, not just supermarket goods and department store goods, but all sorts of stuff is happening online, and that will continue a bit of a trend. So those sorts of areas for companies that have got the opportunity to participate in those, I think will do better than those that are being held in sort of an old-fashioned way of doing business.
Right, okay. Now, final question from my side. I'm going to ask you to stare into your crystal ball. We're entering a very interesting time in the geopolitical sense with the upcoming US election. We won't hold you to it, but do you see Trump winning this election or not? And if he does or doesn't, what does the world look like on the other side of November?
Fascinating question, and let's have a stab at it. So first of all, I think he won't win the election. I think that Joe Biden has got sufficient momentum to get over the line this time. So that's probably the outcome, though, of course, there's some uncertainty. But let's have a think about the two scenarios. So the first scenario is that the Democrats win the election, more progressive policies are introduced, much higher tax rates come about quite quickly, and you get perhaps a re-entering of the United States into some of the global machine that they sort of dropped out of under the Trump's deglobalization sort of policy. So they go back into becoming a bit of an international player again. And it probably doesn't mean that the US economy suffers particularly badly, but it probably does mean that there is a significant hike in the tax rate, for example. There is probably a slower and longer economic downturn period as a consequence. And corporate America and corporate world, by definition, is going to have to put up with higher taxes for a long period of time. So that's one element. And the other thing that comes about in the Biden victory is this very real concern that Trump won't accept it, that he's lost, and that there'll be an ongoing dispute and drama over whether or not it was rigged. And so consequently, I don't know that's good for the geopolitical state of the world. So that's the most likely outcome, is that Trump goes away, with a gruff look on his face, complaining, and Biden wins the election, and America becomes a a less fractious place as a consequence, but perhaps there's not got a lot of economic stimulus. On the other hand, if Trump wins, knowing, of course, that you can only have 2 terms as president unless he changes the law, but knowing that he can't be re-elected, he won't care about too much at all. The second term of a Trump administration will be even more dramatic than the first term. And there'll be all sorts of pronouncements and all sorts of things that go place that make the world a really colourful and interesting place, even more so than it's been under his first term. And that bothers me a little bit, because he's going to want to leave a legacy. And the legacy is going to be that, he's made America great again, because that's what it says on his hats. And if he leaves politics without having achieved that, then he's going to consider himself a failure, being sort of somewhat egotistical as he is. So I think that that's a bit of a problem. We're going to have 4 years of extreme volatility if Trump wins, and perhaps better economic activity for a while, but certainly more risk. And they're the 2 scenarios I put forward. But my answer is that I think that, based on the polls, and not just the polls that come out statistically, but the betting agencies, is the betting agencies that seem to predict elections better than polls do, and the odds are that Biden will win.
I certainly hope they're right. I'll put my colours on the mast. I certainly hope they're right. I don't think I could bear another 4 years of Trump and all the uncertainty and all of the nonsense. It's just unbelievable.
Nor I.
Anyway, that's a personal view. Malcolm, I'm very grateful for your time today, and on behalf of our viewers, our Entrepreneur Australia Capital Connect viewers, thank you very much. Thank you for sharing your insights and some very valuable pointers. Let's hope that we get to that economic recovery rather sooner than later, so that good, hard-working people out there can, make an honest day living and build good businesses for our economy. We wish you a happy week, and we're very grateful for your time.
Thank you, Doug. Here on those comments, and it's been my pleasure. Thank you.
Thank you, Malcolm. Cheers. Have a good day. Bye now.